Good afternoon, everybody. This is Matthew Lindsay with Precision Home Group here in Anchorage, Alaska. Coming to you today, it's Thursday, so we're talking real estate investing basics. Now today, we're wrapping up the 7-part series talking about real estate investing. Today's topic is syndication. So we're going to get into what that is, why people do it, how they put the deals together, what are some of the benefits, and talk all about it. So, if this helps you in any way, please help me get this content out there. Like, share, engage with me. Let me know what your thoughts are on this subject. So, real estate investing basics, syndication. We've mentioned that, this is part of a 7-part series, the last one. So, we're going to quickly do a review on the previous ones, and then we're going to dive deep and get into syndication, what it is. So, first, we started off with wholesale and flipping. We talked about the benefits, we talked about the pros and cons of what it is to flip homes, to do some wholesaling. And then after that, we moved into some other real estate investments. We talked about real estate investment trusts. We talked about how these are kind of like a stock, how they're formed, much like a mutual fund. And we talked about how that they were a way for anybody to really get into real estate investing. Even if they don't have too much to invest, they can get into these REITs usually a lot easier than you can on some of these larger deals that we're going to be talking about today. And then we went into 2 weeks on multifamily. We talked about residential multifamily, so that's going to be your single family all the way up to your fourplex, so duplex, triplex, and fourplex. You get residential loans for that. Talked about some of the pros and cons of that as well. And then lastly, we talked about your bigger deals, your commercial multifamily, and that's going to be 5+ units. Talked about some of the benefits. We analyzed a couple different deals and talked about how having more units, typically relates to more cash flow. So you're able to leverage more and you're able to earn more because of those deals. So we actually went in and I picked 2 different deals here in Anchorage, Alaska, and analyze the deals for you to show you what the cash flow on those would be. So that brings us up to this week, syndication. Really excited about this. Now, we're going to go into the who, what, when, why, who would do this, all that kind of information today. And this is real estate investing basics. So it is the basics of this. We're not going to go super deep. If you do have further questions on this, I would love to talk to you. So make sure you email me at matthew@precisionhomegroup.com. Also, you can comment, and I will reply to those comments. So thanks for the hearts. Thanks for watching. Let's dive into this. Real estate syndication. What is it? Well, syndication is where you're going to have one person that is going to act as the manager for the deal. What they're going to do is they're going to go find the deals. They're going to go analyze different properties, different things on the market, and even some maybe off the market. Go look into them and see, hey, what's a good deal? And they're not necessarily going to be looking at, hey, can I afford this? They're just looking, hey, does this deal make sense? Is it profitable? And can we make this work? If it is, and they have found a deal, and it makes sense and everything works out, what they're going to do is they're going to go find the funding for the deal. So what that looks like is reaching out to different groups, investment clubs, and different investors that you've built relationships with, and getting in front of people so that you can raise the capital needed to put that deal together. So that's in and of itself very basic roots what syndication is. What this gives people the ability to do is actually pool funding, pool money, pool the capital needed to get into much, much larger deals where you're going to have much better margins, you're going to have much better cash flow than you would say, a deal that just you yourself could get in on, especially if you're just starting to get into investing. So that is what it is. Now, who does it? Now, a lot of the times to get in on some of these syndications, it's going to be much larger deals. You're talking, hundreds of millions of dollars on some of these deals, right? So to get in on that, a lot of these syndicators, a lot of the managers who run these different syndications for these capital raising projects, you're going to have to, in order to get in on those, a lot of times you're going to have to be a qualified investor. Now that's done through the IRS. There's some different programs that you can get in on. There is some there's different levels that you have to hit. There's things that you have to qualify for to be a qualified investor, whether that's $1 million net worth, maybe you have $250,000 worth of income for the last couple of years. There's different levels that you have to hit before you can become a qualified investor on most of these deals. Now, there are deals out there that you can get in on without being a qualified investor. A lot of these different syndications that allow that, you need to vet. You need to make sure that when you get into business with someone, that when you're giving them money for a multifamily property, that you're not just turning a blind eye and handing them a check. Now, you may get to that point if you have a working relationship with that person, if you have full faith in that person, if you trust the people you're investing with. That may be where you get to, but when you first start off and you don't know who you're investing with, who's managing the deal, then you need to thoroughly vet them, vet the project, and make sure that whatever it is that you're investing in makes sense at the end of the day. So we talked about what is syndication, the pooling of funds into bigger deals so that you can get in and take advantage of some of the better cash flows, better margins on some of these bigger and larger multifamily deals, right? We talked about who does it. We talked about the real estate, qualified investors with the IRS and who would get in on that. And how do you get into it? So a lot of that is going to be networking. Once you start getting to a point where you can afford to get into some of these deals, the big thing is networking. You need to know. You need to get into proximity to power. And what I mean by that is that you need to be in a place that you can connect with people who are trying to do the same thing or trying to play the same game as you. How you do that? Everything from conferences to investing clubs, to looking for brokers who consistently work in the space with multifamily so that they themselves know other players in that space as well. So there's multiple different routes. Keep your eye out, network, get known in your space, get known in your area, and let it be known that you are trying to get into this multifamily game. And not just in your area, because a lot of these deals are going to be out of states, like in Alaska. That's where we are today in Anchorage, Alaska. There is multifamily investments here in town, but if you want to get into some of the bigger deals, you're going to have to go out of state for that. And getting known in Alaska is going to help me out for sure to get involved in some of these deals, but I need to start getting known elsewhere. I need to start getting in proximity to power players outside of my local area. So we talked about the what, we talked about who, when. How do the managers of these syndications make their money? That's a good question. So sometimes you'll have syndicators. There's two different ways. Syndicators, the managers of these different syndications, investment projects, the project itself, whoever's managing that, they sometimes put their own money in there, and sometimes they just 100% utilize other people's money. So how do they make money on it? Good question. So one of the ways that they do it is they will give all their investors a fixed rate for their return on their investment, their ROI, a fixed rate for the cash flow that is promised. Maybe the project itself maybe it's producing, say 16% return on investment, right? What they can do there is, and it fluctuates from over time. So what they can do is say, hey, we'll give a 10% fixed rate to our investors, and then we'll give dividends later on at the end of the year based on reserves, based on extra income produced on the property and things like that. Hey, thanks, Dustin. I really appreciate the shout out here. Good to see you. So that's how they get paid. Also, when they charge a 10% interest flat fixed rate back to their investors, typically they're going to keep a couple points on top of that as the spread so that they can get paid off of that. So that's another way they get paid as the manager for this project, for the deal, and for the investments. Now, why would you go out and try to find a syndication project? Why would you try to syndicate and get into these bigger projects? It's a good question. There's a couple different points here. So the first point is you're trying to get into a bigger deal, but you don't have all the capital to get into that deal, right? A lot of these bigger deals are going to be a long-term play, and a lot of these bigger deals they cost a lot more because they produce income. They're consistent. Usually they're the deals that you want because you want something in a really good location, right? So no matter what over the years, it's going to be, the location's not going to change, right? So for that location, maybe it's going to be a higher barrier to get in, a higher price for the deal itself. And with that being said, you can get a better return on the investment. So why would you get into this is because you're going to want a bigger project, which is going to produce more cash flow and more opportunity. Also, you're getting in, like I mentioned before, with a lot more players. You're getting known by other people in your space, and you're getting around that proximity to power. So thanks for watching today, guys. I'm going to wrap this up, but this has just been real estate investment basics. Emphasis on basics. I'd love to dive deep into here. We will go further into this later on, but that in itself is what syndication is, real estate syndication at its core. There's a lot more details, as you can imagine. We're talking about big deals, multi-million. We're talking about hundreds of $1 million deals. Not all of them are, but a lot of them do come out to that. That's one of the reasons why people syndicate, pool money, and get in on these deals. So thank you for watching today. I really appreciate it. Send me an email, message, comment, and I will personally get back to you and respond to everybody. So thanks again for watching. I really appreciate it. This has been Matthew Lindsay here with Precision Home Group here in Anchorage, Alaska. You can find me on Facebook and Instagram anytime. And don't forget to go follow my YouTube channel, Matthew Lindsay. Thanks for watching. Have a great day.